Hi, good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. Um, a few things to actually highlight this morning. We've got a GDP number in Singapore came in a lot lower than expectations, disappointed the market, and we saw that of the three components of services, construction and also manufacturing, while manufacturing decline was more or less expected, it dropped by as much as 14%. Similarly, services also saw its first Q-on-Q or quarter-on-quarter decline, which is something rather disappointing because services was looked upon as potentially one of the last bastion for contribution where GDP in Singapore is concerned. Now, off the bat, the immediate reaction is on the Sing dollar that we see down here. This is a 15-minute chart. This pop represents when the announcement came out, and we saw a weakening of the Sing dollar, a strengthening of the dollar Sing, thus this move up. We are starting to consolidate that early move down here. It remains to be seen what will happen, but we saw this big breakout after this long, well, this sort of period of consolidation in terms of the last day or so. If I were to actually draw or bring up the one-day chart, you will also see down here that after that sort of a pullback over the last quarter or early in Q2, for example, on the back of a policy that MAS had in terms of sort of strengthening the US dollar, strengthening the Singapore dollar, we saw this big drop down here. It seemed to have consolidated this big move, this big drop, and we are looking likely to actually be on an upward track again as weaker and weaker domestic growth numbers continue to persist. The longer term view is obviously this. We've had this nice big move for this or the weakening of the Singapore dollar against the US dollar, or a strengthening of the dollar Sing. We are going through a consolidation phase. Obviously, when you look at a currency pair of this nature, two things has to be taken to consideration. This move today is obviously a Sing dollar or a Singapore economy or Sing-led move. But there are certain things happening in the US economy also, in the US policies, for example, which could affect a stronger US dollar going ahead. For example, if the Fed were to hike rates, we're going to see this thing firming up even more also. But anyway, a few things to look out for down here on this currency pair. The other thing, in accordance with US policy moves, for example, that I want to highlight, I've been highlighting previously the last 2 months or so, taken a breather the last month or so, but basically looking at treasuries once more. For that matter, not just treasuries, but the US, the 10-year, the Bund over here, which is a 10-year German government bond, and the 10-year gilt. But let's look at the US 10-year treasuries, for example. We've seen this big drop over the last 3-4 days, and this is a picture of price. Big drop in price means an increase in yield. Now the reason for this is mainly to counteract this big move up. This big move up was a risk off trade, meaning when the world, for example, capital markets were fearful of the grease factor of Chinese equities crash or bubble crash, whatever, money fled to bonds. When money fled to bonds, bond prices rose, interest rates or bond rates basically, or interest rates decline. Now this is the opposite that's happened the last 3 days, as the Greece sort of situation came into clearer picture when there was more or less a resolution announced the last couple of days or so. We saw money being taken off the bond markets out of safety and back on into risk stocks. But more importantly, this also reflects the fact that we are still staring at a rate lift-off later on in perhaps September or later on in this year. Now what this means is with higher rates, you're going to see lower bond prices. So this could also spell a resumption of that downward move. From a chart point of view, this three sort of attempts making an upward move is met with almost an immediate resistance. I would be very I would definitely keep a close eye on this sort of line down here. If we see a breakdown, we could see a fast move perhaps to around the 125 level. If not, we've seen that this level being a trend line that has been has received good bounces on 1, 2, 3 different occasions so far. So it's something to watch out for, along with so many more that you can probably catch on our platform. But for the time being, I just also want to highlight one last thing. Some of the soft commodity boys are starting to react again on the positive side after consolidating after a big move that we saw late in June, especially the last day of June. Anyway, we'll keep you posted if anything new catches our eye down here. Thank you very much.